Welcome to Beyond Wall Street, presented by Arixa Capital, where expert investors make their unique investment strategies easy to understand. Today, we're speaking with Neville Rhone from Arixa Capital, and we'll be discussing commercial real estate investment and value-added investing in urban environments. Neville, it is a pleasure to see you. Thank you so much for joining us today for our interview series.
My pleasure to be here, and looking forward to having this conversation.
Well, let's jump right into it. You are a very experienced commercial real estate investor, and I would like to know what you're seeing right now. Where are you seeing the opportunities?
Sure, absolutely. So, we are commercial real estate investors, but we are largely focused on urban mixed-use environments. And because of that, we pay attention to what people want. The people who want this space tend to be much younger. Whether they be called millennials, Gen Z, anything else under the sun. There's no question that COVID and these really last now almost 2 years has had significant issues that continue to play out, today in these urban markets. So what we are seeing is that, on the one hand, the demand for things coming back to normal is quite high, right? On the other, the business plans, the projections, candidly, sometimes the fundamentals are softer in the urban space far now more than they were prior to the pandemic. And so we are viewing our participation as being part of that recovery, right, for what we know the long-term demand is, right? And sort of how do we get there with respect to the investments that we've made and what we continue to make. So we're seeing quite a bit that is driven by the fact that, sort of the pre-pandemic momentum and fundamentals have softened largely, and that the entry points have softened largely. Nothing is cheap, but by being able to participate and be part of the solution, we're seeing quite a bit in the spaces where we hunt. We hunt in the urban markets. The barbells, I'd say, of where we spend our time is really between California and Texas, so Western in focus. We're focused on, ultimately where the migration is going. And today's story is really candidly that urban is out of favor. And so, we're seeing quite a bit more than we had before, driven by, the impact of people not being necessarily back in the offices the same way and things of that nature.
Okay, so when you say urban mixed use, are we talking about apartments over retail shops, or are we talking about some other type of mixed use?
Good question. Yes, and I think we touch on certainly apartments over retail for sure. But then also we're seeing creative office over retail. There's a time when retail was the primary anchor of activity, right? And that was sort of the main source of what drives value in some of these areas we're looking at. But for us, no offense to those who love the retail space, but we actually look to de-retail. And de-retailing means that you reduce the concentration of what's traditional. We've done it in Denver, where we've turned that into distribution and industrial, right? So what are we doing to take a legacy sort of property type and then having it resonate with those who want something different today, right? That often means there's mixed use in the property, but then 9 times out of 10 or 9.9 times out of 10, there is a mixed use environment. There's walkability. You can live, hopefully work, play in this general area we're talking about, as opposed to strictly and solely a drive-to location. That's how we think about it.
Okay, so it's mostly residential above, but sometimes office above, and the ground floor could be a variety of things. And Are we talking, in your strategy, is it mostly development of new product, or are you buying existing and repositioning existing buildings?
Good question. I would say the majority of what we do is that we're buying existing and repositioning without a doubt. I would say that is our main thrust of what we do in California. In Texas, we can look more at development, but typically it's existing assets and we're converting to something that is more appropriate for today's growing up and coming of age generation.
Okay, great. So give us an example of a transaction that you did do. What was the legacy use and what are you doing with it? And then why don't we start with an example of a recent transaction, or maybe within the last year or two?
Sure. A great transaction we can speak to is we, in Austin, Texas, we acquired what used to be an old epoxy bottling plant. right? And prior to our ownership, it was converted to a creative office, great restaurant locally, barber shop, which was really well known in the location. People are very fashionable in Austin, I guess. And on approximately, I'm rounding up, about 3 acres of land, right? Now, almost 2 acres of that land was parking. So we saw, okay, well, first, there's a really amazing repositioning of what is eclectic in design with respect to being low rise, but as an old bottling plant, it had, certainly steel, siding and, certainly high ceilings, open air, right, in terms of the experience you could create among the creative office, restaurant, and, barber and otherwise. But then we said, you know what, well, this is an asset that should certainly, have more than cars on its excess land. And so there, what we're studying is that we said, well, let's do something special to create more density, right? Can that be a very compelling and well-designed creative office over retail, right? Maybe it should be apartments over retail at that particular location. How can we take what's there, right, enhance the walking and sort of the design experience, right, and then what do you do next? And so we're doing that now in Austin, in a submarket that's called East Austin. East Austin is an area that today has received a great deal of capital interest across the board, but 25 years ago, a different generation, you would never touch it a different generation ago. And why now? Well, why now is because people are coming from across the country to this particular part of the world in Austin. The dynamic of having multicultural dynamism as being an anchor is actually positive and a good thing. And so that's the kind of thing that we're doing because, again, legacy, structure, asset, converting it, adding to it to resonate with today's, coming population growth.
Got it. Which I guess a lot of the coming population to Austin is coming from California. Mm-hmm. So let's talk a little more about the shift to urban density and then the shift away. I'm going to ask you to quantify that a little bit for me. If we were going full on towards urban density before the pandemic, where are we now, and do you think that where do you think it's going to end up in, let's say, 5 years? Is the shift to urbanization, is it really stopped, and are we now in a point where people are going to be working remote a couple days a week and they want to live in a smaller town or they want to have more space? And so, I know in our case, for example, we've hired people that live away from any of our offices, and we've hired them knowing that they will not be coming to our office, but they still participate in certain company events, but we do so much via Zoom now that we don't need them to actually be in Los Angeles or in Phoenix where we have our other office. So where do you think we're going to end up with is that shift still happening, or has that train kind of stopped in its tracks?
That's a good question. I mean, I think the train is still moving, right? The acceleration, right? I mean, now I think in my mind, what we're seeing is a deceleration, right? And the reality is that I think we are going to have a more hybrid structure with respect to how we spend time with each other, right, in the office or not. I think that goes without saying. But ultimately, while I know there'll be those who believe in hot desks and things of that nature, I still need, maybe it's 100 square feet, maybe it's 200 square feet, but we sort of need space per person in some capacity, right? That is really not going to go away to zero. Right. Doesn't mean softness. I mean, there will be, in some respect, to utility, not so much to, leasing, control, or ownership, if that makes sense. Right. So that's one. So we're seeing across the board, certainly today, we started out a year ago, there was 0% utility of spaces. Right. Now that's grown to, call it 40% utility, right, in terms of people who are actually in the spaces. That means, though, that it's you're not looking at a situation where the demand and the need is zero anymore, right? So the trend is going in the direction one. And then the other thing that we're seeing, candidly, is that, at least for us and where we practice, is that those that are younger, who are new to the workforce, those who cannot necessarily afford to have a house or home in Aspen or Boise or whatever the case may be, right? Those who want to have the ability to learn from senior professionals and each other, those that actually and want to have an ability to go out and sit down, have great food, see and spend time with folks that are not like themselves. That's a pretty large demographic that's seeking to be in person, right? Not to be remote. It's just a complete different shift. I can say that I can't say it's necessarily specific only to that generation, right? It's only something that comes with that time of life. And it is much more difficult to, learn, to interact, to collaborate, have those sort of planned moments to really create an experience over Zoom. That's just a fact. So I think Zoom is kind of a great way of adding to how we can be efficient as a team. And I think those who want to stay remote can stay remote. But again, sort of the pig in the python, right? Those who really want something different, is quite large. And we're still seeing that today. Right?
Okay, great. What are the return targets that you are trying to get for your investors? I know that you're using equity to buy the property. You're using bank financing as the debt financing. And you're trying to deliver a levered return of some sort to your investors. What is that return target now and going forward? What do you think is a realistic return target for the type of strategies you're talking about?
Good question. I mean, I think, for us at the asset level, we try to achieve sort of the mid to high teens area based on the risk and execution on the deal. That's generally how we approach it.
Got it. So it's pretty healthy return target. And what do you think are the trends? And we've kind of talked about this, but I want to circle back to it in a different way. What are the trends you would be willing to bet on now, knowing everything that we know at the end of 2021? You're looking for those pretty aggressive returns with some redevelopment, work involved. So where do you look? Big picture. You said you kind of look in California and Texas. You're looking at things that serve that younger generation. But can you give us any more hints as to where you think you're most likely to find the opportunities that can deliver those returns?
Sure. I would say that overall today, we are seeing the ability to underwrite for those returns in places where the neighborhoods are more emerging relative to prior, sort of generations. And so if we're looking at, and I'll just pick on LA, right? I mean, we're not hunting for opportunities in Beverly Hills, right? We're hunting for opportunities in Koreatown and Hollywood, right? And two reasons. One is that there's a pretty large demand for those who are younger who want to be in Koreatown, Hollywood. It's also less expensive than participating and transacting in Beverly Hills, right? So that's how we think about it. Where's the puck going overall by neighborhoods? And many times across the board, and this is driven by just country demographics, and many times these areas are multicultural anchored and driven districts that are mixed use and walkable in nature. That's really it.
Got it. And so back to where the puck is going, that's a great way to think about it. That brings up the investment time horizon of your investments. These are not 2-3 year investments you're making, right? You're making a longer term investment, which lets the neighborhood develop during the investment. So how long is your typical investment time horizon?
Anywhere from 3 on the low end to call it 5 to 6 years on the high end. Okay. Generally, the idea is to go in, fix it, improve it within a short time frame, and then sell, refinance down the road.
Terrific. I'd like to know a little bit more about your career path and how did you get to this point where you have institutional backing to pursue these mixed use redevelopment projects?
Oh, well, sure, absolutely. Ultimately, so I've been in the business of real estate finance, private equity, and otherwise almost 30 years now. I had gotten my engineering degree, and as well as a master's before joining a real estate developer in New York. From there, saw that the skill sets required to invest, develop, and otherwise included finance, and went to business school at Columbia. From there, spent time on Wall Street and met my sort of co-founder here at ARC at Canyon after spending time on Wall Street in New York and coming out in LA. So with respect to how and why we are where we are, we at least try to be sort of honest about what we had seen in our long careers. We'd done probably $4 billion of deals together at Canyon collectively, right? We probably done collectively another 14 billion in total, right, in our careers. And we saw that what seemed to resonate in good times and bad times tend to be more urban, tends to be more anchored and sort of positioned for those coming of age among the sort of the younger folks in these urban locations. Tended to be more, call it middle market in size, right? So, and that's where relationships matter a bit more. And the fragmentation means you can always get just a better deal if you do it the right way. And it's complex. And so with that, we said, well, why don't we launch, spin out? We have great partners who have supported us from the early days, and we hope to continue that trend going forward.
One of the audiences for our interview series is young adults that are interested in working in the profession, working in commercial real estate investment or alternative investing fields. What advice would you have for someone who's just at the beginning stage of their career? What would be your a couple of words of advice that you'd have to say someone who's 20 or 22 listening to this interview?
That is a great question because in a way, my perspective is ancient history in respect, because that was a long time ago for me. But so I would say, to get away from anything specific to the industry, the thing that we see and we love in people and ourselves is just an undying curiosity for whatever it is. Curiosity, right? Persistence in determining the answer, whatever the answer may or may not be, right? And then making connections that others don't necessarily see as obvious. So those are the things that I would focus on as a, sort of what's the fire, right? Now, broadly, again, this is going to sound probably dated, but it does help to start with some, if you can, right, name brands, if that's appropriate for your style, right? It does help to be able to see, well, if I like real estate, well, you know what? It's probably a good thing for me to work with a real estate firm. It's probably a good thing for me to work in real estate finance. Where in that real estate spectrum do you want to participate? And then sort of have those be the building blocks, but always starting from this curiosity, to do more through discomfort, by the way, through the boring stuff. You're not going to love it, right? It's not going to be glamorous, but sort of working through and, ultimately thinking about, well, how do I learn from this? How do I contribute from this, for the next step in the path? And
let's talk about something about your job that you really enjoy, or one of the best things about the career path that you've chosen.
Good question. Well, I'll try to pick just one, but I'll tell you, there are a couple of things, I guess. The one is that I will tell you that it does give me great pride to see who patronizes our properties, right? But what I do love to see is, our people who are from all walks of life, whether they be Latino, Korean, Black, West Side, East Side, doesn't matter, right? Usually all younger than me, usually. But, seeing people get in front of each other to break bread and being a part of that in sort of breaking down those typical walls is what does give me a great deal of pride in general. And that's sort of the invisible hand of pride, right? We just do it and we run that property well. But, when you do that, people come together. So that's, I think, something that, does give us a great deal of pride of where things are today, but encouragement of where things can go.
Great. And then for people that might pursue a similar path to you, what is one of the most painful things or unpleasant things that they need to be prepared for?
Oh, wow. That is a very tough question. I would say it may sound cliche, but it's true. Yeah, things take 2 to 3 times longer than you want and probably cost 2 to 3 times more than you think it should. So I would say that would be the one thing, right? And so, the plans are important to have in place, but you need to know that you'll need to over time pivot and sort of deal with what comes with the unknown down the road. And I think that's the toughest piece, I would say, for those who are sort of in our seat.
Thank you for your candid input on those topics. And I
Mhm.
love your suggestion that if you're starting out your career, embrace your curiosity is sort of one of the primary things to do to to be successful. I think that's great. So let's go back, zoom out again to a bigger picture. Here we are in California, and for the first time in its history, the population did not grow last year. And the quality of life living in Los Angeles has changed.
Mhm.
I've noticed it. I'm sure you've noticed it. And Austin is different. I'm sure Texas is still growing for sure. But there's a lot of things that have been difficult recently with quality of life here. Whether that's the COVID restrictions or homelessness, which is a tragedy, but also some of the parks that we used to use as a family are now homeless encampments, the
Mhm.
entire park, right? And there's a lot more challenges walking through the walkable neighborhoods you're talking about. It's more fun to walk those walkable neighborhoods if you don't have to worry about what you're going to step on every 4 steps, right? So is this a temporary aberration in the California dream? Are we going to snap back and fix these problems and so that the urban environment can be enjoyable again? Or do you think that for some reason we're not going to be able to do that?
Well, I mean, you're talking to an eternal optimist, so take what I say for a grain of salt. But I do believe that things will get better, and we are seeing it. There are parks, candidly, locally, that have been taken over and been cleaned up, right? And now things are better, and that has happened recently out here in Northeast LA, right? There are stories where people are saying, well, let's instead of having it be new, bricks and sticks homes, maybe we should look at almost better managed and controlled environment camps, right? That have services attached to it, so that you can have a system that's an onboard to more permanent supported housing. So that's just one example of where the fact that we are both talking about it, and it's something that now everyone is really focused on, those are the seeds that change how things are headed. So we're seeing some of that. One, two, overall though, I mean, as much as people have moved out of California, there's also, I mean, people are still moving here, one, and then more importantly, California as a whole probably still is probably maybe the fifth or seventh largest economy, right, on earth. So the economic activity here as a whole is significant, and that doesn't go away overnight. So those are the things that we think about. While it's not perfect here, it's not perfect anywhere, and I do think that things will get better over time.
Okay, terrific. And I would like to end on some input for our core audience, people that are maybe interested in going beyond stocks and bonds and they want to figure out, how do I learn about this and how do I get into it? Based on your 30 years of experience in this field, what input would you have for them to safely navigate the path to alternative investments?
As a whole, including real estate, yeah.
Yeah.
I would say that from a practical standpoint, everyone has friends, from their schools and upbringing, right, and network heavily within that for the spaces you're curious about. I know nothing about crypto, right? But one of the things that is important to do as well, I'm going to talk to those who do know, but then invest with those who know that world as well. So, sort of leaning on, managers who know the spaces, to have an entry point into alternatives, I think is important. So I think those are the two main things in order to sort of kind of on-ramp to getting more involved in that world.
Terrific. Well, Neville, I want to thank you so much. It's been very interesting, as I knew it would. I've really enjoyed this as well as our discussions over the years at different events, and appreciate your joining the interview series today.
Well, thank you for having me. Really appreciate it. And I'm here, so I'm a resource anytime.
Thank you. I'm Jan Brzeski, and you've been listening to Beyond Wall Street.